What's up everybody? Nate here. So the housing market has been going crazy over the last 2 years. And since the pandemic has started, we've seen housing prices skyrocket by nearly 20% on average. So with the housing market growing day after day, many economists and real estate investors are wondering, is the housing market headed for a crash in 2022? Well, today we're going to be talking about the 5 most likely scenarios that will happen to the housing market in 2022. But before I break all of this down, if you haven't already, hit, smash, or destroy that thumbs up button below and ring that notification bell too. That helps to show me that you like this video, that you want to see even more just like it. So let's start with right now. What is happening with the housing market in February 2022? Well, in short, the housing market is still insane in terms of prices. Like I said, prices have gone up by 20% over the last 2 years, and they continue to rise because of supply and demand in our country. There's just not enough houses on the market right now for every single buyer, meaning that our market in 2022 is still a seller's market. That means if you're looking to buy a house in 2022, chances are you're going to pay more than asking price. Now that is not a guarantee, but that's what most buyers are having to do right now. Some are even paying 10 to 50K over asking. And it's kind of a mad scramble for houses right now because the Federal Reserve has talked about raising its benchmark interest rates up from 0%. That would mean that this gold mine for buyers is about to go away. You see, when the pandemic first started, the Federal Reserve dropped its benchmark interest rates down to 0%. That essentially meant that a lot more people could get a loan. It was super easy because interest rates were so low. That ultimately caused the mortgage market to explode because people who couldn't afford a house before now could afford one. But this sort of created a ton of problems in our economy, especially with inflation, and our supply and demand is way off. Our market is not functioning normally, and that goes for every market. So in order to kind of curb this demand, the Federal Reserve has talked about raising its benchmark interest rates this year, and they're going to start doing that in March or April. And bringing interest rates up is good for inflation, but it's bad for the housing market. And knowing that, a lot of buyers are even pushing harder than they were before to get a home. Spring of this year is going to be the hottest point for houses of the last 2 years. And that brings us to the first likely scenario for the housing market in 2022. Mortgage rates are going to rise. Now, the Federal Reserve raising its benchmark interest rates doesn't technically mean that banks around the country need to raise theirs. However, this is most likely going to happen. Right now, the average 30-year fixed mortgage interest rate is between 3.65 and 3.85%. The 15-year fixed rate is at around 2.8 to 3%. But for the 30-year fixed mortgage rate, that could go to 3.8% as the low mark by the end of this year, with some predictions saying it could be even over 4% on average. Now, banks and the Federal Reserve raising their benchmark interest rates basically shows that our economy is starting to recover from the pandemic. The only way that the Federal Reserve can raise interest rates is if they feel that the American public is still going to go out and buy homes at a normal rate. They couldn't do that at the start of the pandemic back in March of 2020 because Americans didn't have any money, or at least we didn't think they were going to have money for a long time. That incentive is going away, so it's going to start pulling people back from buying new homes. But that's not all the Federal Reserve has announced they're doing. When they were pumping trillions of dollars into our economy between 2020 and 2021, they were also buying billions of dollars every single month in mortgage-backed securities. This offers extra liquidity for banks and investors on Wall Street. But that money is going away. They've racked up a balance sheet of around $9 trillion, but they want to own none of that over the next few years. Basically, for banks, that means they're going to have to be a lot more careful with who they give a loan to. So you could actually see interest rates go up even more, pushing more and more people out of the housing market. Now that could kind of help with prices a little bit because it's going to help with supply and demand. The Federal Reserve is literally dropping demand by raising their interest rates. Not as many people are going to be able to qualify for a mortgage because they just can't afford it. Even a 1% difference on your mortgage can mean paying hundreds of dollars every month and hundreds of thousands of dollars over the lifetime of your loan. So even though they're not going up that much, it's still enough to push millions of people people out of the market. Now, the Federal Reserve hasn't talked about how aggressive they're going to get with their policies in the future, but they really need to start curbing inflation sooner rather than later. In December 2021, inflation hit a new 40-year high of around 7%. Now, depending on how aggressive they get with inflation, that will determine the performance of the mortgage market in 2022. If they don't get super aggressive, then you might not see an outright crash in the housing market. Basically, buyers will start disappearing slowly and prices will slowly start to draw back from there. So it'll feel more like a correction rather than a crash. However, if they get super aggressive and start raising their rates by 0.5 basis points instead of 0.25, well, then that could mean millions of buyers essentially disappear outright, and that could crash the housing market because people aren't going to sell their house if they're losing a ton of value. But also, we have to keep inflation in mind here. Inflation basically means the monetary supply of your country is going up, and we have printed trillions of dollars over the last 2 years. All of that money is now circulating throughout the economy, so people are spending it, and that means prices in every market are going to go up. Now that a lot of that free money has come back, though, Americans have to be a lot more strict about what they're spending their money on. And if prices continue to get out of control in both the housing market and just in their everyday lives, well, then people aren't going to be able to afford to get a new house. Even if we do start to see prices go down in the housing market, if everything else for Americans is going up, then that's eating into their potential new house budget. So that basically starts a roller coaster in the housing market, because if people are buying less houses, then banks have to be a lot more strict on who they're giving loans to, which means interest rates could go up even more, which pushes even more people out of the market. So just based on that, the housing market is in super fragile shape right now. That leads us to scenario 2. The housing market stays hot. Now, we've been talking a lot on this channel about real estate crashes and housing market corrections. While there's a really good chance that we could see a correction or a crash in the housing market this year, that's not necessarily set in stone, at least not yet. So as the Federal Reserve raises their interest rates in 2022, that's naturally going to push a lot of buyers out of the housing market. But it's not going to push all buyers out of the housing market. There's still going to be millions of people in the country who are looking to buy a house, and some people will buy a house no matter what. This could lead to some offsetting in the housing market from the real estate perspective. Now, you might have some banks and real estate agents who are pushing buyers into borrowing more money than they can probably afford. The reason being is to try to offset a lot of the money that the Federal Reserve is going to be pulling out of the market. With all of that money essentially disappearing and banks eventually raising interest rates, well, then they're going to have to make up for some of those losses, and they can't force people to buy a house, so the people who are interested in buying a house, they might approve them for a higher mortgage than they might be able to afford. This means more money for the real estate agents, more money for the bank, but it leaves Americans with way more debt. And that could be a problem, but ultimately that's going to mean that housing prices continue to get pushed up further and further, with some predictions saying that the housing market is going to go up by around 16% in 2022. That's not a correction, that's not a crash, that's another boom. And there's always the case that our economy could recover a lot faster than anticipated, which would mean the Federal Reserve wouldn't have to raise rates as aggressively because people are still going out and buying things and the housing market isn't collapsing. That could encourage sellers to continue to put their house on the market, and it could encourage a lot of builders to continue to construct brand new homes, which will help with the supply and demand problems. If they're able to kind of catch up, then they'll have more houses on the market, which means more opportunities for banks to sell mortgages. And there is a huge case for the housing market to explode in 2022. Just look at Fannie Mae and Freddie Mac, the two largest owners of mortgages in the United States. They actually pushed up the amount that they're going to guarantee to banks and other financial institutions to nearly $1 million for 2022. That means for lower cost areas, banks will be backed by Fannie Mae and Freddie Mac by nearly $100,000 more than they were in 2021. And for the high cost areas, well, that number is going up even more by around 150% to nearly $1 million. That means they're anticipating housing costs to go up, because why would they raise their rates if housing prices were actually going down? There'd be no reason to. This represents the largest increase that they've had since 1980. So yeah, we're setting another record. So even though there's only going to be a few houses on the market, they're all going to sell, and the price that they sell for is going to be massively massively inflated, which could mean housing values go up in 2022 by a lot. Which brings us to likely scenario number 3 for the housing market: bidding wars. We're going to see a ton of bidding wars on houses and real estate properties in 2022. Because rates have been so low for so long and people have been gathering a lot of free money from the federal government over the last 2 years, they've been able to throw tens of thousands, if not hundreds of thousands of dollars at homes over asking price, which means the bidding wars are going to get pretty crazy, which is why most buyers right now think 2022 is not a good time to buy a home. Consumer confidence for the housing market is at a record low, which is kind of a problem for everybody if you really think about it, because even though sellers might make a killing on their house this year, selling it for sometimes tens or hundreds of thousands of dollars over asking, well, what happens after you sell your house? You have to live somewhere. And then they enter the market as a buyer, and buying a house right now is extremely difficult. And it's only going to get harder if the Federal Reserve starts raising its interest rates, because that means buyers are going to immediately start piling into new houses even more. What's worse though is our supply is being bought up by real estate investors. So what's happening is some real estate investment firms are actually buying up houses and property all throughout this country so they can rent them out or actually build new buildings. That's taking away supply from the general public. But those big investment firms can spend whatever they want on a property. So if you're in a bidding war with an investment firm, well, you're probably going to lose because they can continue to raise their price up. Now, of course, there is a price that nobody is willing to spend on a house, but I can guarantee you that that firm's price is going to be a lot higher than yours. Now, to be clear here, this is not happening in every market or in mass, but it's definitely happening enough that it's causing some issues. Still, 90% of all homes sold today are by the general public, everyday average Americans. But that hasn't stopped millions of millennials from buying an additional house and then renting that out like these investment firms are doing. We've talked a lot about on this channel how the stock market has exploded over the last few years. Well, that's because of a lot of the free money and stimulus that has been poured into our economy. And the stock market has hit new record highs, and beginner new investors have contributed to that a lot. Well, the same thing might be happening now with the housing market. You have millions of brand new real estate investors entering the market, buying homes and then renting them out. But again, that's taking away supply from people who are going to use these homes as single family homes. That phenomenon is growing because it's super easy to get a mortgage right now, and the supply of homes is low. So you basically have a stranglehold on the market. And what happens when somebody sells their house or decides that they need to move? Well, they have one of 3 options. Find a new house, they can move into an apartment, or back to the parents' basement. And that's if you're lucky and have money in this economy. A lot of people are struggling with any one of those 3 options right now. But like I said, that all contributes to the bidding wars because investors are going to spend a lot more for a house because they're seeing it as an investment and they're going to get a return on their investment versus a single family. Well, they only have so much money to give. And again, while that will push a bunch of people out of the housing market, people have to live somewhere. So they're going to rent homes, and renting has gone up significantly over the last 2 years. In some markets, it now costs you more to rent a home or an apartment than it does to buy a house. Your mortgage is going to be lower in a lot of cases, but it's all about timing and finding the house. Which brings us to likely scenario number 4. The housing market is actually going to normalize back to levels like we saw in 2019. So just like inflation, the Federal Reserve wants to bring down inflation to a normal level of around 1 to 3%. Their estimates say that inflation is going to be at around 2.6% in 2022. So still a bit elevated, but not as high as it has been. Well, we could see a similar situation in the housing market. Housing prices may not go down a whole lot this year, but they might not really go up a lot either. Typically, housing prices go up between around 2 to 5% every year. We may start to see things really slow down depending on how our economy recovers. Like I said before, as you have prices continue to go up in the housing market, well, eventually some buyers are going to be priced out entirely. They're not going to be able to afford a home anymore, and the value of a house is directly tied to what somebody is willing to pay for it. If you put your house on the market right now and decide to sell it for, let's say, $100,000, but then it just sits on the market for weeks and months at a time, that tells you that nobody is willing to buy that house at the price you set it at. So you have to bring your price down to maybe 90 or 80,000. Then you might start to get some buyers because that is the true value of your home. Well, if rates continue to go up, even if they don't go up by a lot this year, that's going to push buyers out. And if prices continue to go up because some people still are able to buy a home, that's going to push out even more buyers. The only people you're going to have left are the ones that can afford these insanely high prices right now. So in this scenario, you're not going to see a lot of bidding wars. There's not going to be a ton of competition. What the seller sets their house price at is what it's actually going to sell for, which means house values might not increase that much this year. They might stay pretty stable. Bidding wars and supply and demand is what has caused our housing market to go up so much over the last 2 years. But if that variable is gone, the housing market is going to be elevated from where it was in 2020, but it's going to stay at that elevated level. And that's it. Nothing fancy, no crashes, no correction. You'll just see a housing market that has gone up by 20% over the last 2 years. Now, of course, the housing market will continue to rise. As inflation goes up and people naturally pay more for things all throughout the country, that's going to include houses, which means the value of your house is naturally going to rise too. It's probably not going to go up by 15 to 20% though. Chances are it's only going to rise by around 2 to 5%, which is normal in the housing market. And finally, likely scenario number 5, things get a little crazy. So with all of that being said, what you might see in the housing market this year is a complete wild card and combination of everything. Remember, our economy is not just one single thing. We have such a diverse population of people and a balance of wealth that's not super balanced in our country, which means everywhere throughout the US is going to be different. And it's going to be affected by everything from the federal government to the Federal Reserve to the stock market to the American consumer. Not only that, but the employment market and the jobs market is going to affect our economy too. Over the last 2 years, millions of people have moved out of major cities for the suburbs, mainly because they could get way more living space than they could in the city at a way cheaper price. Plus, interest rates were going down, which meant they could afford more house in general. Now, as the pandemic starts to end, people might start moving back to the cities, which could open up the housing market too. And people have needed to move into homes because of work from home culture. We now have millions of people who don't want to go back to the office. They want to work from home, and they've proven that they can do so since the pandemic has started. If our economy continues to move in that direction, well, then people are going to continue to go back to the suburbs, but I don't know if that's going to be the case. I live in a super small rural town, and let me tell you, there's nothing in it. So while that might mean I get a big discount on my house, that also might mean that there's nothing around me, and there are thousands of cities all throughout the country exactly like this. People don't just move for work, they move for a lot of other reasons, like the culture. City living has bigger culture than small town living. There's a lot more amenities. It's convenient, there's a lot more there, but it's a lot more expensive. Well, if people are saving money living in the suburbs, they might have saved enough to move back to the cities. So you might start to see renting in cities go back up as people start moving again. But again, that all just depends. It depends on how our economy works in 2022. If the Federal Reserve can find the line between raising interest rates way too much and keeping them way too low, well, then that could mean that our economy starts to recover a little better. They won't have to pull as much money from the New York Stock Exchange as quickly, so the mortgage-backed security market is going to keep thriving, which means banks and other financial institutions are going to get their money too. And if we have this influx of real estate investors, well, then you might have an influx of mortgage-backed security buyers. As the Federal Reserve exits the market, well, there's going to be room for millions of new investors to start buying mortgage-backed securities. If that liquidity can stay near what the Federal Reserve was providing, then banks won't have to raise their interest rates super high either. So in short, you're going to see pretty much all of this happen in 2022. Supply and demand continue to be a problem, bidding wars pushing prices up even more, but the Federal Reserve not raising interest rates enough to push all buyers out of the market all at once. In addition, as people move around our country more houses might start opening up, because that's one of the biggest problems with the housing market right now. there's only so much space in the US. It's not like a stock where you can have millions upon millions of shares. There's only so many houses, and while there are millions of homes in the United States, eventually we're gonna run out of land, which is why housing prices continue to go up year after year with inflation. But all of that might give home builders just enough time to build enough houses to start meeting demand again. Right now, though, it's really expensive to build a house, which is why it's lagging so far behind right now. So yeah, the housing market is going to be crazy in 2022. But what do you think is going to happen with the housing market this year? Do you think that any of these 5 scenarios are actually possible, or do you think that something totally different is going to happen to our market this year? In addition, what do you think about the housing market actually growing or crashing in 2022? Which do you think is more likely? As always, whatever your thoughts are, leave a comment below before you go. But that is it for me, everybody. I hope you liked this video, and if you did, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.